Welcome to GreenKite to Ask the Experts. In this podcast series, we cut through the jargon and we try and get straight to what really matters in our industry. So if you are having issues, you're navigating tricky changes, then you're in the right place. Come listen to us and we'll help you tackle those questions in insurance, one episode at a time. Hi, good morning. Welcome to GreenKite's inaugural podcast, and I'm delighted to say that Claire Carpenter, one of our amazing experts, is here with me today. We're going to have our first topic, talking about consumer duty and what the impact has been out there in the market and what we think's on the horizons. But before we get into the crux of the issue, I am delighted to introduce Claire, and I'd like her to tell you a little bit about herself and why she's here with me today. Claire, welcome.
Thank you, Sara. Delighted to be here with you and chatting as always. I'm Claire Carpenter. I've been in the industry for 20 odd years for my sins in various guises of compliance and conduct. Worked for big insurance companies, brokers, MGAs, and particularly on the consumer lines, and a real passion for compliance and all things consumer duty. I've been a consultant for 5 years now, and the last 2 years I've been working with GreenKite, supporting their MGAs, insurers and brokers with all things consumer duty, fair value and just general market support.
Thank you, Claire, for that intro. That's amazing. And we know that you're a super expert on everything consumer duty. So without further ado, we all had lots of sign-offs and implementations and board involvement and training and goodness knows what else last year. And we're all wondering what the FCA were going to do. There's been lots of rumours going around. Lots of people have written things, haven't they, about what the FCA are going to do and where they're going to find their teeth. So what types of firms do you think, Claire, and what products particularly have the first 6 weeks of 2024 indicated that the FCA might be interested in as far as consumer duty? What's your view?
So the FCA have created basically a league table that we're all being judged by, and it's called value measures. And they have gone through this league table and they have attacked what they deem based on value measures to be the lowest value products in the market, and they've started with gap. They've been, as some of you may or may not be aware, the FCA have been dealing and investigating gap for the last 10 years. And the value measures reporting data was submitted and then reported on from 2022, and it showed a number of products, primarily gap, but a number of other motor ancillary products to essentially offer limited value from the FCA's perspective. Interestingly, the economic environment post-COVID, residual vehicle values and economics has actually played quite a hand in the actual poor performance from a value perspective from the product. So what's happened during COVID, residual vehicle value went up, and then buying a second-hand car, the values went up. So when people had an accident in their primary, and they claimed to their primary insurer, what's then happened is that there's no gap between what the insurer paid out and what the car's worth. So the claims were accepted, however, they were of zero value because actually the car was worth more than it was the previous year, and there is no gap in, which is usually the case, gap in what the primary insurer pays out and therefore what you then can buy a second-hand car for. So that's been primarily and economically the
And I think issue. Actually, Claire, it would be fair to say that that actually has given the FCA one of the routes by which to look at this product. I think that's fair. Would you agree?
Yeah, I absolutely do, and because the value measures data. So this was a requirement that came in, I believe, in 2020, and then was the first reporting was done in 2021, or the latter half of 2021. There's a number of metrics the FCA want all firms based on consumer products to report on a standard set of metrics. One of which was percentage of premium paid out as claims. And what that does is that shows how much money the customer's paid and how frequent they're going to get paid and to what value. And we quite often see, £1 million sums insured on products, but and gap insurance say, we'll pay the gap. But often it's actually £500 is the payout. And it's low frequency, and also low severity risk, and that's what's that's what's happening here, and that's the concern of the FCA, is that you pay £100, but only £6 of that's actually getting paid out.
So I think this all takes us all back to the whole point around consumer duty is to look at the outcomes for the customer and reverse engineer the product. And maybe we can cover some of that off later, Claire, in this podcast. So GAP's obviously not the only product. Are there some others kind of that have got flags, you think, with similar experiences for customers out there that the FCA might be interested in?
Absolutely, and I think that, as I said, the value measures has become a naughty list of a league table, which you can go and have a look at that data. We're obviously all going to need to submit the data at the end of February, so we're going to have 2023 data. So it is a Santa Claus naughty list, and you can see who's performing, and it does it on a range basis, but go and check that out, because if you're at the bottom compared to market averages, you are going to be of interest to the FCA right now. And the products that are on that list, firstly GAP, and we can see the FCA are now being very aggressive and quite interventionist in this product, despite having looked at it for 10 years, but various measures in place. We're now looking at furniture warranty, we're looking at electrical warranty, we're looking at ding and dent insurance, we're looking at motor warranty, we're looking at excess protection, and even travel. So there are a number of, you can see from this the published data where the FCA's hit list is, and having spent a lot of time going through this data with various insurers over the years, this data also isn't accurate. This is best endeavours. So the FCA is gunning for this data, and you're going to be on this league table whether you like it or not. So you damn well better make sure that that data is accurate, because you are.
Oh my goodness, that's a word of warning for all those people out there, isn't it?
Isn't it just?
So I think that's really, really helpful. I mean, all of those products are very consumer orientated, and for all number of reasons have various distribution partners in the market. And I think that for me is an interesting segment and slant for the FCA. I think one of the other areas which I'm interested in exploring with a view behind consumer duty is this whole thing around value measures and what really those value measures are looking at. And I think it's fair to say, isn't it, that there's definitely been some writing on the wall that the FCA are interested in, obviously the fair pricing, i.e. the outcome to the customer, but also how we treat vulnerable customers and whether we identify them in the right way, but primarily the products respond to those people in the market who are less financially astute or capable, maybe, it's fair to say. Would you agree, or do you have any views on that, Claire?
I completely agree, and I think everybody's been over dramatic about vulnerable customers, because every single time I speak to a firm, it means that somebody says they're vulnerable if they're dyslexic or if they've got one leg or they're blind, that we need to pay their claim immediately. That is not what vulnerable customer requirements mean at all, and I think it's really important that we don't try and ram down the throat. Are you vulnerable? How can I help you? And just be like over needy and over obsessive about establishing vulnerable customers. That is not what the FCA are intending, and I'm seeing it all over the place. It's just aggressive friendliness of trying to establish people's vulnerabilities, and that is not what it means, and it's not what the FCA have intended either. So you need to create mechanisms for people to report vulnerabilities. You absolutely do. So web chat, if you're doing a digital journey, you need it on your accessibility page, and you need web chat, or you need a functionality for people to be able to report that. But you don't need to ask them 75,000 questions trying to establish what vulnerability they may or may not have at any point in their day, week, month, year. And that's really important. And what I advise firms to do, and we in our sort of house stance at GreenKite, is to do, basically, you don't worry less about the front end. It's when the product is designed and how the product performs that you need to worry about vulnerability. Will it perform for the vulnerabilities that you're likely to experience within your target market on an ongoing basis or on a temporary basis? And I think just a common sense approach to vulnerable customers is really critical. And one thing I also find, just going out to TPAs, everyone's trying to run call analytics to try and hear things that might indicate people with vulnerability. These TPAs do a great job of helping vulnerable customers. And obviously, I haven't got the skills to talk slowly, but some people just talking slowly for some customers is a mechanism to support a vulnerable customer if somebody can't understand me talking a million miles an hour, and that actually should be recorded, and the data should flow through from that. But people aren't doing that yet.
I mean, I think it's all about fairness, isn't it? Making sure you have those controls across consumer and retail products and services so that you can prioritize fairness to all customers along the customer journey. You know, it's about having streamlined processes and making sure that you can simplify your communications, as you say, Claire. So it isn't
And you're
complicated
right.
stuff, is it?
No, you're absolutely right, and you nailed it there, because it's by design. What the type of customers that may and the most likely vulnerabilities, you design a product assuming that you're going to experience those vulnerabilities throughout the customers are going to experience those vulnerabilities throughout the journey, and making sure that you account for those in advance, and you're ready and set up to do that, rather than dealing with individual circumstances on their own.
So is it just those people that do personal lines or customer facing products that need to worry about consumer duty and FCA scrutiny, or does it have ramifications for the wider market?
Fabulous question, because I think people believe, I think because it's called consumer duty, it kind of gives the impression that it doesn't apply to commercial business at all, and that's fundamentally not the case. And in my experience, the FCA are going quite hard at commercial lines insurers, particularly multi-occupancy and small business insurance, where the FCA have identified that firms have essentially created vulnerability to commercial customers by delaying paying claims and one-man bands, and they're not treating them any different from a multi-corporate to a one-man band. They created vulnerability, and over the business interruption, that essentially some firms folded because they didn't pay the claims over some COVID or various other business interruption events that occurred, and they created vulnerability, and so many small businesses went out of business as a direct result of the claims handling by these massive insurers.
Yeah.
So I think there's a misconception in the market. It does not apply to commercial,
Good
but
point.
actually commercial, they can create vulnerability.
I think that's a really interesting stance, and the whole BI claim, dare I say, debacle post-COVID is a case in point, isn't it? I also thought it was quite interesting because I don't think it's just general insurance either, because obviously we operate primarily in the general insurance space, but I think it was the latter part of last year the FCA issued some findings of a review around terminal illness benefits and life insurance protection products, where they thought that actually there were some issues around how we treated consumers and did we treat them fairly. For instance, if someone's suffering from a terminal illness, is it fair that the benefits under their policy only kick in 12 months before they're about to pass? Probably not, was their conclusion. And so things around the claims process, the management information, and checking that the right checks and balances are in place. And, arguably one could say that an actuarial pricing on a scenario so like that might not be fair. And I think that's an interesting angle, maybe not for the FCA this year, but I definitely think it's in their action list. Would you agree, Claire?
Absolutely agree. Having previously worked for life insurance providers, everybody's essentially vulnerable, because that's the worst point in your life when you need to claim on a policy like that. So the product needs to perform for the worst time in somebody's life, and it needs to be sympathetic, and it needs to be quick, and it needs to be efficient, and it needs to do all the things it says on the tin. Never is the same with home emergency and breakdown insurance. I kind of feel the same thing.
Yep.
Everybody it's claiming is in a sense of vulnerability,
Yep.
and so so your products there need to be designed for people being vulnerable, because your whole base is vulnerable when the moment of truth.
So we obviously know there's all these very interesting avenues and angles that the FCA can pursue. We always talk about the FCA not having any teeth in enforcing the regulation which they employ. I kind of feel that the tenor in the market is different now. I don't know if you agree, firstly, but secondly, what kind of interventions have already taken place, are starting, or do you think are on the horizon for firms who maybe aren't as good as they should be at some of this stuff?
I think you're right. The tide is shifting, and it's stressful out there. If I'm honest, having worked for mostly insurers for most of my career, all if we look at PPI and we look at Gap and we look at mobile phone insurance, for example, these are general insurance products the FCA have investigated over the last decade at least, and no intervention has come at, or certainly public intervention has come at insurers.
Right.
The Consumer Duty and SMCR is a perfect breeding ground for the FCA lining up exactly what they needed to do, which is hold insurers accountable for the design and delivery of their products. It's all well and good somebody misselling it in PPI, but PPI was not designed properly. It was missold, but it wasn't designed properly. Mobile phone insurance was not designed properly.
So that gets right back to Prod 4, doesn't it?
Exactly. And so IDD came in, then we've got general insurance pricing practices, and now Consumer Duty. Now this, to me, is the FCA doing exactly what they should be doing, which is lining up the requirements so there is no escape. You design a product, and that's why everybody in IDD and Prod requires it. Then insurer is always at least a co-manufacturer. And with SMCR and linking all of those things together, this is the FCA, and we're going to see it. Mark my words. In the next quarter, we're going to see fines at insurers like we've never seen them. FCA have never gone after insurers quite like this. This is absolutely the right decision on design, and we're going to see that.
And you think it's enforcement notices, personal liability under SMF,
Absolutely.
fines, suspensions, the whole shebang?
Absolutely.
Really?
This is going to be shocking. We have never seen anything like it. This is they're going in hard, and to be honest, I'm really pleased because having worked in compliance this long, very rare. There's a fine over here that's tenuous about somebody selling something, and now I know the FCA are attacking the right area, and actually heed my warnings now are going to materialise. I'm going to have some good examples of it. I told you, because I've been saying that for 20 years and it's never quite managed.
So we potentially could have some seismic changes in the market as well, couldn't we, as a result of some of these interventions, I suspect?
Absolutely. And one of the things I keep mulling over in my head is that the FCA have introduced Consumer Duty, and they are holding everybody to a new standard, right? And they're asking people to assess fair value. Now, firms can't say a product not fair value, because what are the consequences of that, right? The consequences are redress programs. We need to cancel and stop selling. We need to then pay loads of money back, right? So firms are not incentivized or inclined to say that the products aren't fair value. So what firms are doing is justifying, with as much good logic as they can and the more data they can do, to justify their products fair value. They're not looking at it whether it is fair value. They're justifying it is fair value. And this is going to be one of the interesting things with Gap, because everybody has been doing the same thing, and we've seen quite a lot of the responses. Everybody's done the same thing, justifying why it is fair value. And now the FCA has gone, no, this isn't fair value, because you're paying a minuscule amount of the premium out in claims. You're paying over 50% in commission to dealers and to distributors. This can't be fair value. So now everyone's looking at it going, okay, well, you've moved the goalposts.
Yeah.
And now they've all signed this off. And now there's degrees of governance and rigor and check, and there's market norms, but there's going to be fines on this, and unfortunately, for some of these firms, it may well be personal fines. And I think, sadly, it's the right decision to shake the market up.
So it used to just be about accurate and reliable data, but now it's actually been out to justify your data, isn't it? And all the necessary components that make up the premium, but also your distribution chain. Because you say the FCA are gunning, if I dare say, for the insurers. That doesn't mean the intermediaries and distribution partners are off the hook, does it?
No, it doesn't at all. However, I think it's smart for the FCA to go after insurers, and if Matt Burris is listening here, the insurance industry wants commission caps. They are trying to innovate on gap insurance and various other consumer products. They are trying to, but they're all competing on who will give the most commission, which means there's not enough margin in there to be innovative and add extra value. So the insurance industry absolutely want a commission cap, which the FCA refused to do, for obvious reasons.
Well, that stops them being a principle-based regulator, doesn't it? Firstly, because it's a rule.
Well, exactly, and everyone will operate to that level. So I can see exactly why they haven't done that. So it's not necessarily a criticism. However, because they are intervening here now, people can't deliver dealerships, 50, 60, 70, 80% commissions that I'm seeing. That and with having a baseline where the FCA confirm what that is or not, will allow for innovation and more facts to be put in the products, and more and insurers are desperate for it. And I don't think the FCA quite understand that, because now it can be truly an innovative product
Yeah, I
without the
agree.
need to compete on commissions.
I think there is a will there, definitely. That's definitely the feel that I'm getting from the market. There's those that want to step away from the old market because they don't want to change, and those who are encouraged by the opportunity to have a larger market share by the new ways of either packaging, designing, or distributing this product. And I think that time will tell how that materializes, and it will be quite interesting to see what happens in the next few months, the rest of the year. Okay, thank you, Claire. That was really helpful. Look, I think we've touched on it marginally, but really, in your experience since kind of July time, what do you think is one of the key areas that firms are struggling with vis-a-vis demonstrating their compliance with consumer duty, or indeed justifying and validating that their consumer duty frameworks are operational and embedded?
So, as I've already mentioned about fair value, so I won't go on about that, because people are just justifying that it is, rather than looking at whether.
So that's a real problem for people in your experience.
Huge problem. The biggest problem that nobody will be surprised at me saying is data. That particularly with long distribution chains, trying to get data, internalize data, and use it in a way that's meaningful and representative is an issue. We have it in the lawyers market, we have the general insurance market. Bordereau formats are not in the right format. It's not asking the right questions. We don't know what the right questions are often, and various other departments are pulling the same data and annoying the distribution chain as much as anything. So I think the access and reliability and accuracy of data is huge issue, and it does stop people really being able to make real-time decisions.
Do you think all firms already have data, or still some are at the stage where they don't even have that data available?
So I think on the most part, so I've worked with huge insurers right down to small MGAs, and they have data.
Right.
The problem is it's how they take the data. So one, are they asking the right questions from the data? Often no. And also when they get the data, how that's then processed, and then how that's used and distributed through various functions within the business. And one version of the truth is absolutely critical at a certain point in time. Everybody needs to be singing off the same sheet and the same data set. And people find, underwriting teams don't talk to compliance teams or claims teams, and these silo mentality is part of the issue. If we have this data in, everybody should be able to access it. It should be locked down in terms of validity, but everybody should be able to access it and then run through that data. And people don't know what they need to know, so they use it for underwriting, but actually there's a wealth of information that can be used for fair value and compliance, but also claims and complaints, and there's so much of that, even that minimum data that can be used. So that's absolutely an issue, and I have not seen a firm also do anything, particularly in consumer products, for outcome 3 customer understanding. Testing on communications is not happening. I'm having the same old conversations I had 10 years ago with distribution partners that haven't tested it, don't know what the testing requirements are, even not even using NPS or customer feedback to enhance the communication understanding. It's quite shocking, actually.
Yeah, and I think that ties in with the point we made earlier about embedding the fair treatment of people and vulnerable customers, doesn't it, in particular? Because there needs to be a focus on complaints. There needs to be a focus on product feedback. There needs to be an understanding of what those timelines are around delivery and whether or not people are comfortable or unhappy with those. And I think I was at
a conference yesterday. I was speaking to a guy from he was a distribution guy from Ireland, in SMF essentially, and he's saying that every single complaint that they get, the senior management spends however many complaints they get, hours talking through every single complaint.
Gosh.
And I just thought that was fantastic. Obviously not necessarily efficient,
or proportionate.
But to have the exec, but so it probably shows they've only got 3 complaints. But anyway, but I thought that was absolutely fantastic. Well, and also in Ireland, if you have 3 FOS equivalent complaints in a row, then you get fined by the FOS.
Interesting.
which I thought was fantastic. But the fact that they go through every single complaint and say, I'm not saying that's necessarily proportionate for, your Avivas or whatever that might get thousands a month. But I thought that was really fantastic that the execs were going through and understood every single customer's name and every single customer's experience, and they talk about it, read it, and absorb it together. I thought that was absolutely fantastic. Whether you can do that in reality on a bigger scheme.
Yeah, I mean, I guess there is a scope for that in everyone's business, because actually proper complaints analysis, whatever level of the business, should make sure that that's fed up to senior management anyway, shouldn't it?
It should.
But I guess the whole point is once you have those metrics and that information, it's feeding into the new products and the service reviews and making sure that your sign-offs take into account and your approvals take into account those recommendations and those improvements to ensure that there is a tangible benefit and consistent outcomes for everyone, for all your customer base. So I think that's a great example of perhaps going above and beyond, but very admirable. Thank you. So I think we're coming to the end, Sarah, of our podcast number 1, and hopefully that was interesting. So I thought we'd finish off today by just setting out or kind of identifying some of the other things that what we think might be on the agenda for the regulator. I hope that's a nice way to kind of conclude today's podcast, but also temper everyone's appetite for podcast number 2, maybe. So and please do feel free to jump in and either prod Claire or myself for some insight that you think that's on the horizon as well. But Claire, could I firstly ask you, what are some of the other headwinds and maybe some mistakes or areas that firms can focus on to avoid the rap on the door from the FCA? What would you recommend?
So firstly, I would say that I would take heed of the FCA's communication on gap, regardless of whether you are selling gap, insuring gap. There are some important guardrails and insights that you can get from what the FCA is talking about here. And I think that it is very clear that these extend well beyond just gap insurance and well beyond consumer, actually. So pay attention to the cross-pollination of some of these points on all product lines. Go back over again your fair value and product assessments. Are they good enough? Is there enough evidence of challenge?
I think that's really critical. Actually, it's okay to fess up that they're not as good as they could be, isn't it? It's an ongoing obligation.
It absolutely is. And I've heard the FCA say that to a provider of a product that you potentially have breached Principle 11, be open with your regulator, that you didn't come to us when you saw letters going out and communications going out to other people, which I thought was a fascinating point from them, of that actually you should have come to us earlier despite us not writing to you. So it's really important you pay attention to these regulatory developments that are coming in, even if they don't look relevant, because they may well get you on Principle 11 on the basis that you did not pay attention to something they said on a completely unrelated product.
That's definitely the lawyers of the FCA working hard to work their way around that one. Go then. That's very good. That's very good. I also think there's probably some questions that are related but not quite identical around some of the motor products that are out there. Some complaints on motor finance. I mean, just the other day, that Consumer Duty champion, the man who had the show on the TV, saying that motor finance is inherently unfair for everyone that's out there. And I think, some of the Consumer Credit Act agreements that sit behind some of these consumer-based products are subject to some scrutiny there, because one could argue, couldn't one, that the rates of interest that are paid are neither proportionate, aligned, progressive, or deliverable and indeed understood by the customer. So if you put the FCA outcomes-based view around a Consumer Credit Act agreement, some of those providers need to start considering what their agreements say, read, and actually charge the customer. So
I mean, you're absolutely right on that. And I say, having been in insurance most of my life, having looked at some of the car finance stuff, and having the conversations with dealers that are franchised, that are remunerated in a certain way, which becomes a quite significant or not insignificant proportion of their revenue, it's very difficult to justify fair value when you're looking at car finance. And
Yeah.
there are, again, some really interesting tidbits here. And also there's cross-pollination with other insurance products and an overall value. And that is an industry that often only moves when the regulator tells them to move, and they will not move quicker than that. And I can't help but to be a little smug on the basis that I was told we will not move, we will not adjust commissions until the regulator tells us, and that is now happening. This is the new PPI, and it needs to be reviewed properly, and it's quite difficult given the structure of it. So, but there's some guardrails for insurance that we really need to be paying attention to.
Yeah, that's definitely one we'll be watching for and keeping abreast of, isn't it? Okay, so I think, Claire, we've probably exhausted everyone's minds now, given them lots to think about and ponder on over the next few days. Please do reach out if you need any additional advice, either to Claire or myself. We're both active on LinkedIn, so just send us a message if you need any help. But this is just the beginning of these podcasts. Hopefully they're exciting, informative, and quick-witted, a little bit commercial, and occasionally funny. I think that probably just leaves me to conclude and draw to a close and thank Claire for her time, her expertise and insights today. It's been great speaking to you, Claire, and I hope you come back on another podcast later in the series. Thank you very much indeed.
Thank you.
Thanks for tuning in to Ask the Experts with GreenKite, and we hope that you've gained some valuable insights which help you steer your insurance journey with confidence. Remember that for every complex question, there's always a clear answer just waiting to be unearthed. Join us next time as we continue to decode the intricacies of the insurance world. More expertise on demand? If you need it, then visit our website. Take care and see you all on the next episode.